Welcome to the January 2023 Las Vegas Real Estate Report and the 2024 Housing Market Forecast. In this video, I am going to cover the December Las Vegas area housing stats and give you a recap, an overview of what happened in 2023. Plus, we're going to talk about what's happening for 2024 on a national level and specifically what we think is going to happen here in Las Vegas in 2024, which is all about mortgage interest rates. So a lot about that today. Who has leverage right now, buyers or sellers, and when are we going to see that shift? And will new builder incentives continue? All of that and more. Stay tuned all the way to the end here. We've got a lot to cover. My name is Jan O'Brien, along with my co-team leader, Cosmo Morabbi. You can follow us on, subscribe right here on YouTube if you're watching. We're on TikTok, Las Vegas New Homes, and at Living Las Vegas. And also over on Instagram as well. So this is our great team of experienced realtors that are covering the entire valley. Make sure you reach out to any member of our team. We're here for all of your Las Vegas area real estate needs. Let's dive in. We're going to talk first 2023 and specifically December. So in December, we ended the year at $449,900 as a median sales price for single-family homes. I'm only going to report on single-family homes, not condos and townhomes. We do have that information. If you're interested, you can reach out and we'll be happy to share that with you. That was actually up almost 6% year over year. Units sold, 1,518 units sold. That's down 1% year over year. New listings, only 1,500 new listings came onto the market in the month of December, down over 10%. And that means units available is how many single family homes were available at the end of December. That's down almost 40% from December of 2022 at 3,766. Cash sales were almost 29%. They've been hovering all year, right around somewhere between 26 and 29%. This chart I've been tracking for the last 2 years just gives perspective of that median sales price on a monthly basis. And I always like to point out that we hit a historical high here in Las Vegas in May of 2022 at 482,000. And then something happened, and that something was inflation started going up, mortgage interest rates went up. And then what we saw happen in December, the story in 2022 was basically no equity gain. We started the year at 425 and we ended the year at 425. Fast forward to 2023, and let's just go back. We were flat for the first 4 months of the year, which is pretty much the story the last 6 months of 2023, where we hovered right around 450. So 425, we went up to 450, and we've been right around 450, 449.9. We'll call it 450. That's where we ended the year in 2023. I just like to show these charts just to give, again, that historical perspective. These go back to 2016, the number of closings. You can see this dip that we had in here at the end of 22 into 23. This is hard to see because there's not much of a movement here in the median sales price just because of the scale. But this is definitely interesting, right? If we look at all of 2023, look at how far down the listings were, meaning not as many homes on the market. And we know why, and that is particularly because interest rates were high throughout the year, hovering in between 6 all the way up to 8. And we were somewhere between 6 and 8. And I'll get to where interest rates are today in just a little bit. But this corresponds obviously to availability, not as much demand. There were sales made, just not as much, but we did have low inventory. And you can see how far down that really was when you look back at the peaks and valleys of the previous years. Now, this is the Las Vegas annual report going back to 2014, which is just totaling up for the whole year. And I've highlighted a few things here. The number of units sold, you can see we had, like even during COVID year, we had a high of 38,690. COVID, really was into half of 2021 into 2021 or 2020 into 2021. Then we went from 38,000 sales in 21 to 27,800 in 2022. These are closed sales, single family homes in the Las Vegas Valley. Then we went down to 20. I think this is actually, no, it's single family because here's condos here. 22.5. So we went from 27.8 in 2022 to 22.5. Let's look at the number of new listings because this is significant. You can see it's been in the 40,000s most years, right there at 39, 40. Well, 28,201. That tells the story right there. Not as much inventory and not as much demand. However, we made sales. And then we'll look at this. This tells it too. Availability is simply the difference between the number of listings that come on the market, the ones that go under contract, what was left at the end of the month. So you can see we were in the sixes and 5,000 to COVID years, 32.40. Then we dropped to 22.51, which was that lowest of low in the middle of COVID, where that's when the prices all shot up because there was literally hardly any inventory, but not too much higher right here at 37.66 for the end of 2023 when we got back up to 6,000 in all of 2022. This chart is just taking those numbers and showing what was the equity appreciation gain. And as you can see, as I just said, in 2022, we zeroed out. And in 2023, because we're at 425 and we went up to about that 450, we got almost about a 25,000 median appreciation here in the Las Vegas Valley in 2023. So let's take a look at what happened nationally in sales for in 2023. So an 18% is general. The numbers aren't fully in, but National Association of Realtors is anticipating an 18% decline in total single-family homes that were sold in 2023. On track for the worst year since 2008, when we had the downturn, the Great Recession, or since 1995. Now, let's take a look at new home sales across the country. We're up 4.5% year to date, which is on track for the third or fourth best year for new home builders since 2008, because when we had the Great Recession, builders really slowed down. And for like 10, 12 years, builders just were not building the number of homes that were really needed for demand prior to COVID, which meant that we were always going to have a bit of an inventory challenge because the builders weren't building. Now they have ramped that up in the past couple of years, and that's what that is reflecting. So what do we think is going to happen here? What do the experts say? What are we feeling based on tracking these numbers so closely month over month? And again, if you're not already subscribed to our channel, please subscribe. We put this monthly report out on YouTube with the details so you can stay really focusing on the Las Vegas Valley. Occasionally we'll talk about what's happening nationally, but we really want to focus on what's happening here if you're thinking of buying or selling in the area. Now, we all agree, experts agree here, economists and everything, mortgage rates are going to have to decline for anything significant to happen, right? So they are anticipated to decline as long as we do not have any other major economic or pandemic type event. Everything is pointing towards inflation's continuing to come down. The Fed has actually, forecasted that they're going to, I think they're coming back a bit on it because, as much as inflation is coming down from the high of that 8, almost 9%, and in the 3.1 or so where I think where it ended up the year, they want it to get to 2%. And that is totally makes not just what happens with the stock markets and 10-year treasuries, which then impacts what happens with the mortgage interest rates. But it's a lot of things that impact our interest rates. And it's obviously the inflation. It's looking at all the economic reports that come out every week and throughout the month. And it's, jobs data. Okay. So at the end of the year, we had better than expected GDP growth. A few of the numbers were on the high side when it comes to good news for the economy, which is unfortunately bad news for the interest rates. So we're all kind of projecting, I'll get to mortgage rates in a minute. Let me just stick with this. Mortgage rates expect to decline. When they do decline, and I don't know what that magic number is, but I'm going to tell you what I think it is. And I think it's under 6. I think we've had a couple years now where we hit up to 8. We went over 6 in 2022. Then it climbed up in the 7s and then 8 for a little while. And it's been hovering in the 7s and the high 6s now for most of last year. I think there's a mentality thing for sellers, people that might want to put their homes on the market, and buyers, that they're looking for, forget it if you think it's going to be 4%. Again, we'd have to have some cataclysmic event like another pandemic or something else that is going to cause the rates to drop so much. So if you're holding your breath for 4, you need to start breathing, okay? Honestly, but I think that number is somewhere below 6. Okay, so let's take a look at a few things here. When that happens, then sales are going to increase. Absolutely. There's huge pent-up demand, not only for buyers, but sellers who really love their rate, but maybe they're not in love with their house anymore. So increase in sales, and home prices are going to rise, not fall, because we're not going to have enough inventory with all this demand that'll come back onto the market. Prices are going to go up. Now, this is a projection from National Association of Realtors and Brian Buffini and company putting out some predictions, which I really liked. This is just tracking the transaction for national numbers from 2020. You can see how we dipped here in 2023. So 2022, it went to, this was a high here in COVID, right? Everybody was out buying houses because the interest rates were so low. 5.6 million, 6.1. Then we went to 5.1. It looks like we're going to be right around 3.9. That's 23%. So somewhere between 18 and 20% down in the number of sales. Projections are maybe up 18%. And then even, another 15% up in 2025 if everything stays on track with that. So mortgage rates expected to dip below 6%. Again, I think when it's below 6%, this is a mental number that says, I think people will be like, I'm ready. We're already seeing people start to get out and buy more homes and more sellers put their homes on the market. I think this magic number is below 6. And here's this interest rate and a projection. So just to put it in perspective, in 2020, COVID year, 3.72. Then it dipped down in 2021. The rest of as COVID continued, down to 2.65%. This is why people don't want to sell their house. They've got rates that are between 2 and 3, under 4%. It's crazy. Then look at this, 3.22 in 2022 to a peak of 8% last year. This is what I think is going to happen personally, and this is what a lot of folks are projecting. Maybe we get to about 5.75 by the end of the year this year. I don't think we're going to see these interest rates happen until second half of the year. There's too many things that the Fed is still wanting to watch. They don't want to drop the rates too quickly that the inflation could go back up, because consumers, we go out and we're still spending. We're still buying things, okay, even though inflation is high and even though grocery prices are high. So this is the projection. This is Brian Buffini's projection, and I'm like spot on with this. I agree with, if everything trends the way it's going without any major problem or national or world crisis, maybe we see 5.75, and then maybe we get below that in the following year, 2025. And this is just a chart showing over from 2019, the correlation between the 30-year mortgage and the Fed funds rate. Okay, so you can see that, this is where the Fed funds rate went down to nothing and the rates stayed down low. And then here's where they're up right around now, like mid 6s. All right, mortgage rates. So here is just since October where the rates moved. And we did have a peak here where it went over, it hit 8, okay, back in October. And then we had these dips, and it came back down. For a little bit, it was down. It didn't go below 6, but it was hovering right at 6 point something, 6.1. And then it had a couple moves up, and this is where we sit right now. So here's the deal. Mortgage rates, when they decline to under 6%, I'm going to say it again, the huge pin-up buyer demand and sellers who now want to list are going to come onto the market. And I just think it's going to turn from what we've had. If you watch any of my previous videos, all of last year, we've been talking about the leverages with buyers. This will make the shift to more sellers. We'll have the leverage, and we'll see less concessions, less builders offering less and less incentives because they won't have to, because there'll be more demand. When that happens, we will have bidding wars. We will have people competing for the same homes, which means that they'll be writing better offers, not asking for the seller to pay any concessions or closing costs. and prices will go up because of that. All right. So that's what's possibly going to happen. So let's talk about these opportunities. So 30-year mortgage rates are currently expected to fall. That's what I've been saying. Somewhere there, this is coming from Fannie Mae, between 5.8 and 6.1 in 2024. So under 6%. Again, I think later in the year. So instead of waiting for rates to drop, this is what we've been saying all of last year. If you're a home buyer, maybe even if you're a seller who wants to sell and take advantage of opportunities and maybe get the best of both worlds, which is it's impossible to have both. You can't sell high and buy low. You're going to have to pick one of them if you're a seller that wants to buy. But if you're a home buyer here in the Las Vegas area, you might want to use these next several months before the rates drop too much and everybody jumps back into the market, because you will be having a lot of competition. If we can get a negotiator rate for you right now, because sellers are willing, including new homes, are willing to pay concessions, you can always refinance later if you think it goes well below 6 or well below 5. Okay. So inventory has been low all year, around 4,000. Really, it was 37.8 or so in this past month. What we are seeing, it's a mixed market in new homes and in resales. It has been all year, and I think we're going to continue in these first 1 to 2 quarters of 2024, very much like it has been in 2023, with the exception of a few things. I think we're going to see less and less concessions as we move along. But if you have if you see a great home on the market and it's been updated and it looks modern and it has been revamped and doesn't have 20 or 30-year-old appliances and flooring and counters and so forth, those homes sell quickly and they can have multiple offers. So you won't get as much concession on those. Where there's opportunities still are I would say more than 60% of the homes that are on the resale market, if not higher, are in need of some type of updating if they're older than 20 years old. That's where there are some opportunities for maybe getting a better price and getting some concessions. Again, more competition, can't say it enough. When everybody jumps back into the market, it's just supply and demand. It's simple economics. You'll have multiple offers. That leverage is going to shift to the sellers. This thing that's happening with new home, we really are new home specialists here with Cosmo and I and the team. We really know where the builders are and which builders are offering incentives and not. It's a tale of two types of builders. We have builders in the Las Vegas Valley who are controlling their inventory and their releases, and they're creating a waiting list. There's several builders who do that. You're not on long waiting lists. It's not like a bidding war at the moment. It's just they're controlling it so they can control pricing, and they can kind of control, they have the demand, and as the demand picks up, they'll even do it more so, which allows them to move the prices up and reduce the incentives. Then we have a group of builders who are building spec homes. They're constantly building, they're selecting the upgrades. And then if those properties don't move quick enough, that's where there are incentives. And there are incentives if you use their builder, like special financing, below market rates. We've seen everything from 4.99 fixed to, in the past week, several of them have gone back to a 2-1 buy down, where it's a temporary buy down where you get 2% below the current interest rate for the first year, then 1% for the life of the loan. But we are still seeing on the spec homes, quick move-ins, meaning it's ready to go in now or in the next 30 to 90 days, we are seeing some special financing, closing cost incentives. And maybe we have numerous times in the past 90 days been able to get lower prices on some of the standing inventory for our buyers, as well as all these incentives. So if you're a buyer and you're really thinking about it, reach out to us so we can talk to you about how can we get that interest rate to a place that you're comfortable with the payment, as opposed to waiting. Because when you wait, it's all good when you wait and you want to wait till the rates come down. Just be aware you will now have lower interest rates, but you're going to have so much more competition. You're not going to get the same deal you could potentially get right now. Okay. And if you are let's look at some builder deals. There are over 250 homes, new communities, 20 plus national builders and some smaller builders all throughout the Las Vegas Valley. building. And so there are tons of opportunities from single family to townhomes. The builders aren't building a lot of condos. It's mostly townhomes. There are a few small condo projects, but mostly single family and a lot of more affordable townhomes. Again, reach out. We can help you. You can see they're all over the valley. And then if you're a seller, if you're listening and you're a homeowner thinking about selling your home this year here in the Las Vegas area, I definitely think you can wait. You could wait, because if you wait till the interest rates come down so you're more comfortable with giving up that lower interest rate, do I think that you could get a higher price? Yes. And not have to give as many concessions? Yes. I definitely think that. However, the challenge you're going to have is, if you're going to stay in the area and buy, now you have to take off the seller cap. Maybe we got a really great deal for you. We got you to net solid transaction and it closes. Now, if you're going to go buy, now you're going to go compete. Okay. So that's why I say sometimes timing is everything. And I really think that from now into the next 3 to 4, maybe even 6 months is an opportunity before it shifts and the seller has more leverage. So reach out to us and we can certainly help you talk about your specific situation. And by the way, everything is specific to each of you listening. There is no perfect scenario. It's all about doing a one-on-one consultation and seeing what your goals are, talking that out with you. It's never too early to reach out to us to talk about whether you want to sell or buy or both. We are definitely here for all of your real estate needs. So thank you for listening. Hopefully that puts a little perspective of where we've just come from and where we're anticipating going in 2024. But you can certainly stay on top of that. Nobody has a crystal ball. This is just what we feel has been happening, what we think is going to happen based on tracking the economic data, what's happening with the mortgage industry, and then, of course, what's happening here locally with pricing and supply and demand. Make sure you're following us